Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. I want to do a quick update or a video just on kind of trade management of credit trades. Now, credit trades are also called cash flow strategies. Some of our favorites are things like iron condors and naked puts and covered calls and credit spreads and so on and so forth. So what I did is last Thursday I entered into some trades primarily on the theta standpoint. Here's just a virtual trader just to kind of show you kind of how the process of a credit trade works. Now in Thinkorswim you can kind of see how it's broken up into different types of trades. If you want to do that, and that's something I would recommend, just go down here and group symbols by spreads, and then just kind of click on the button of the type of spread you have, and then Thinkorswim here will kind of break that down based on the different spreads. So here's your iron condors, here's your vertical credit spreads, here's your single trades. These are all like naked puts and so on and so forth. And then if you want to see kind of your portfolio numbers, your deltas, your thetas, your vegas and gammas and so on and so forth, come back to this and then go to the old layout, and this will kind of look at from a delta, gamma, theta, and vega perspective. So here in the trades I made last week, just kind of highlight theta, we have a delta of 100, gamma of negative 135, theta of 441, and vega of 743. Now whenever you're a credit trading and you're positive theta in your portfolio, you will always have a negative gamma and a negative vega because the speed of the movement of the market and volatility in general, they will always work against you. Theta works for you. So what this number tells me right here is that we are making $441 based on theta. So of the profit loss we saw today, 775, 441 of that was positive theta. The rest of that is primarily due to delta here, not vega and gamma. And so delta is always the strongest of the Greeks, theta is the second, vega the third, gamma the fourth. And so here on theta, we have a positive theta account, which we always want to carry. We always want to carry some degree of positive theta. Now let's talk about the trade management aspects of it, and let's take into account some of these kind of single trades right here. So right here we have a trade on crude oil. This is in the futures market where we've sold 10 contracts. We're 30 days out. We had a net liquidation value of 2,100 right now. Now that was not the net liquidation value when we originally sold the contracts. We sold these contracts just 5 days ago. So over the last 5 days, we've already made $2,400. We have $2,100 remaining in the trade. So if you add these two numbers up, the original net liquidation value wasn't 2,100. The original net liquidation value was 4,500 because we've already gained or profited on the 2,400 of the original 4,500. So in the first 5 days of this trade, we've made $2,400. We can only make 2,100 left. So we've already captured more than 50% of the gains of this trade in the first 5 days. So the question for the credit trader becomes, is it wise to keep $15,787 in margin out there in the market for the next 30 days to make a grand total of 2,100 left when the original was 15,000 to 4,500? We've already made over 50% of the gains. So what the theta trader would say to be the most effective, the most efficient, say, you know what, maybe I want to pull off this trade right here. Let's take profit in this trade right now and let's reset the trade. So the theta trader would say, okay, let's pull off the 43 put options that we sold in the futures market. Let's lock in that $2,400 a gain, and let's go to the trade tab here and work in the exact same month. Okay, we're going to work in literally the exact same month that we were working in last time, and instead of selling the 45s, we're going to get out and sell something else. So let's type in /CL, and as you can see right here, we are in the futures market. Lots of strike prices. So the original contract we sold was the 43 option here. We sold that for $4,500. We've already captured 2,400 of it. So we're going to close that trade. we're going to now sell the 46 options, reset the trade, and we're going to have $4,500 left to make over the next 30 days instead of $2,100. So again, the management here would be this. We're going to close the trade because we've already locked in 50% of the gains. We're going to close that trade. We're going to reset the trade. Instead of selling the 43s, we're going to sell the 46 put options, and we're going to make $4,500 using the same buying power. It's just a way that we can get in and out of the exact same trade. Now, that's in the crude market, but I also put this trade on right here, and this is USO. USO, we have $310 left of net liquidation. We originally sold that for $640. We've captured $330, over 50% of the gains. So once again, instead of just, setting in that exact same trade for the next month, we're going to close off that trade, reset the trade. Instead of selling the 16 put options now, we'd go to here. Let's go to USO. Instead of selling these 16s, would come back out, would sell the 17s, would right click, sell, single contract. Let's turn that to 20 contracts, put that in a mid price, and now we can capture $580 using the same buying power. So once again, just through your trade management, you can be a lot more effective, a lot more efficient if you learn how to manage your net liquidation value and the amount of days you have left in the trade. Here, it's wise to pull off the trade, reset the trade. Instead of selling the 16s, you pull out the money you've already made in the trade. Now you sell the 17s, and now you can capture $580 instead of $330. Once again, trade management is king. Matt Josephs here for Tackle Trading. Hope you enjoyed the video. Check us over there at www.tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.